What's up everybody, Tom here with another video. In today's video, we're talking about why this channel is one of the most important for us to be looking at right now in the markets. We'll also be talking about technical analysis levels for the S&P 500, Nasdaq, silver, gold, Bitcoin, and Tesla. It looks like commodities are back, and they're back with a big boom. Has the silver squeeze just begun? Let's take a look together right now. Stay tuned. Alright guys, well as we always do, let's take a look at this heat map for the S&P 500 and think about what happened yesterday to see if we can get an idea of where the money is moving right now in the markets. Amazon and Tesla down fairly heavily, but defensive sectors and energy were up. You can see here healthcare was up very heavily, consumer defensive, energy, all moving strongly with what was going on in the markets. And you can see that there was a big disparity between the Nasdaq, which was down 0.48%, and then of course the Dow Jones, IWM Russell, and S&P 500. All of those actually ended green and fairly flat through what was a very low volume traded session. Then we scroll over and we have a look at the sectors. Energy up huge, XLB materials up pretty well as well, and then we had healthcare, one of my favorite sectors. So two of my favorite sectors really doing well through the session. Down the bottom, XLK technology, XLY consumer discretionary. Generally that kind of more growth risk on play was not really feeling it through the session. Now, this week is still earnings, and we need to be aware that while we've had some of the biggest earnings, we still have some big hyper stonks. We've got some big other companies coming out as well. We've got Skills, we've got Activision Blizzard in the close on the Tuesday night. Then, of course, we also have Pfizer in the open, PayPal after the close here Wednesday, Twilio, Fastly. It's always great to have one of these earnings whispers calendars so you know what to wear. And I mean, Thursday seems to be some of the biggest tech stocks that are like the smaller ones that are coming up, the kind of disruptives. We've got Square, we've got Roku, we've got Peloton, AMC, Cloudflare. It's all happening on Thursday after the close. Probably the most exciting day for the trading week ahead. Now, we talked about the S&P 500 for May, and I'll just bring these charts up for first-time viewers just to show you the disparities here that we've got. So we knew April was going to be a good month. There was a high statistical chance. Doesn't matter what April it is, there always seems to be a great seasonality kind of thing. But May, sometimes it's down. So you can see here in an average year, May will actually be a declining month. Now, usually after an election, May is a stronger month, and it seems like around this area here is where the weakness comes in. Now, why is that? Because it's taxation. That's where the taxation and all those changes start to really occur. Around 6 to 7 months into the year, everybody starts to find out exactly what's going on with the new policies. We scroll over here and just have a look at May for the last 10 years. 2010 was actually a negative year for May as well. So we had negative, and then a couple of flats, and last year being 12.3. Don't worry about that because it was always going to be more positive when we were going through a recovery. That's really a little bit of an outlier from general statistics. Here's the overlay between 2008, the green one, and where we're at right now in 2020, 2021. You can see that everything is still tracking very similar to what it was last time. And if we are going to get that May pullback, then it could be sustained for a couple of months with an incredible strong run into the end of the year. I'm still thinking this is a possibility, and we use price action on this channel to figure out whether it is occurring. So without further ado, let's get stuck into this technical analysis because things are happening right now in the markets. We'll start with the dollar index. We talked about this live on stream last night. Subscribe, come join us in the live streams 1.5 hours before the market open every day of the week. But let's check this out. Here we have support, resistance, and resistance. Now, imagine if the dollar index was able to close above this 91.33 zone. What is that going to do? That is going to create a serious amount of, I think, bullish momentum, and that bullish momentum could push the dollar index into 92. But look, the bears took control of it right where they're meant to. Now, we pull back down possibly to this zone, and if we get a new low, of course, we go towards the 90. And you can see the trend line I've got drawn here through the last two lows has been respected. So we're stuck in the middle of nowhere land for the dollar index. We've got strong resistance 91.30, and we've got some decent support here around this 90.50. A break underneath is going to expose 90, if not 89.50. So bears are still in control, but bulls, as soon as they get through that 91.33, I think they could come right back in. And what's this causing? Some really great movements here in the metals. And I can tell you, this is probably one of the ones that I'm most excited about right now. Silver just broke out, guys. Silver squeeze, we've been talking about it. Whether it's a silver squeeze or it's just something else, great movement here off the 20 and the 50, the blue and the red lines. These two moving averages always are great to have on your charts. You can see how they acted as dynamic support. And now we have our closure up and through the 2650 zone. This now exposes 28, and I think this is a great little movement here for silver. Possibly get a little pullback here, retest of this zone, and then movement to the 28. Let's talk about this as well from the inverse head and shoulders perspective. If you took the entire distance from the bottom down here up to the top, and you thought about this extrapolated out, what does that proof to? Amazing. Look, it's not quite proofing to the 30, but it is certainly moving well up. I think 28 is the next area that I'm looking at. And once you get past this 28 with a nice closure, then you're talking about 30. And you know what 30 is. 30 is the key area that the bankers do not want the market to go over, because check this out. If it ever gets above 30 and you go back through history, you'll see silver just explodes up to that $48, $49, and that will be really big and actually could kind of roil the market. So silver looking great here on the charts. Another one, the beast has awakened again. We've got some movement here finally in gold. You see the weekly here, it's slowly creeping up, and it's all in line with everything we've been talking about. Great strong bullish movement here yesterday. You can see the daily 20 and 50 again held it. We had all our supports. This was our basic line, 1755 after the double bottom. And we have that idea of the 1825. So around this area here was what we were aiming for, and we can still be aiming for it right now. We go down to the 8 hour, have a think about how it's interacting with this current resistance. And you can see that, yes, this resistance is big. Of course, once you get a ticker up above here, and you start moving above that 1797, the 1800 is not going to really act as a resistance anymore. That line is going to be taken out. It's just the 1797 that needs to be really broken through. 1800 will be taken out, will be 1810, 1820, 1825 quite fast after it breaks through here if it can. So it's all looking really, really great here for these commodities. They were certainly one of the most interesting ones to be looking at yesterday. Let's now go over to BTC. So unfortunately, BTC, bit of a flash crash there, and some of the other coins, bit of a flash crash. Why is this? I always like to blame Doge, and the reason I do that is because whenever Doge starts rallying, so that's Dogecoin, it seems to really affect the coin markets. And we saw Doge go up to 45 cents yesterday, and it just caused all sorts of problems. We've also got Ethereum now trading incredible, 3,300. It was up even more than that at one point, but you'll notice that this is the point where you expect buying to come back through for Bitcoin. So we've got the resistance. Hopefully this 50 can hold and it can be bought off this level, and then we continue on. This time round, if it goes up to the 60, unlikely to get much selling at the 60 because it's already had that sell-off. So then we move up to something like the 65, etc., etc., etc. It's interesting times here, but this is the one that's doing the damage. When this broke out to a new high, or very close to a new high, and had that expansion, that always hurts the crypto market at this stage. Go over to Ethereum, it's still looking very strong. I mean, look at this, 3,450. I'm looking at ETH versus BTC ratio, and I think that's probably the one that most people should be looking at. And we talked about this on the channel yesterday. We go out to the weekly, and we think about how high it spiked last time. I was watching this point, so this is definitely a point that I was starting to get very curious at, but I'm thinking this has to be paid a lot of attention to. The 0.066 ratio, because of the speed at which this is going, once it gets to this ratio top, I expect heavy selling. So somewhere around here is where you're going to be looking if you're trading the ETH. I think it's a very, very clear level that a lot of big whales will be looking at. We'll move over to Tesla. As we said yesterday, it's not really easy trading here in Tesla. We know our zones, but we also don't have much faith in it because of this large candle that occurred on the Friday session. So we're still really maintaining our 666 down the bottom here for support. We still had our 700 through the session. You notice it bounced off it with the previous day, and it did come down, have a little bit of movement, but really with Tesla, until it gets above 720 again, and then I can trade it to like a 745, or it gets below 666, and then we can trade it down to a 625 or a 600. It's very hard to read on the charts. I mean, how do you look at this? and interpret exactly what's going on. This is sideways movement realistically, and sometimes it's better to stay away unless you're an investor. So I think that Tesla's hard to read. Hopefully the 666 continues to hold for the bulls, and if it gets through 720, I'm back and interested in doing some swing trading on it. But at this stage, pretty tough to swing trade this one unless you've got just absolute fortified control of your portfolio. Let's now move over to the indices. Here is the US 100, and as we expected, we are back down in the support zone now. So this is the 13,745 area. This is getting very close to our 13,725 support zone. If we break and close below that on a significant time frame, I'm really thinking we could extend out here back down to the 13,300. And the problem with that is it's going to mean that sell in May is occurring right now. And this is the major indice that's showing the weakness. The tech sector, even with great earnings, is the one that's showing the weakness. Now, it could always bounce back off this level. Of course, this is the support line, and then go back and test the 14,050. And if it ever breaks past the 14,050, we're still maintaining around that 14.4 is the eventual goal. So look, we've got it trapped. I think we've trapped it pretty well as a community here. And we've got really an idea now of what we're looking at for the next couple of days in the market. We do have a bit of an idea on where things should be holding. Let's move over to the S&P 500 because this one is even more convoluted. We saw the bullish strength yesterday in the market, and you can see how tight this is. Look at how tight it is. There's barely any trade going on here. And that has me always worried in the markets. When you get no trade, you've got big earnings sessions, and there's just not much interest. That's not really the greatest thing in the markets. We've got a lot of support that was found here at the 41.75. Why is this important? Well, it's because look at the wicks. Buying pressure, buying pressure, buying pressure, buying pressure. If it comes down here and then closes through, that's so significant because there was a lot of buyers here before, but all of a sudden you get a closure underneath 41.75. That's going to signal to us further bearish pressure down to our eventual 41.20 support. So the 41.20 support is still open here. The market's still coiling above the 41.75, so there's no real reason to be bearish at this point on this market. But if that Nasdaq gets through, I think we're starting to see a little bit of tipping over here. And with the movement in silver, the movement in what is potentially hedge kind of commodities and everything else, I could see us coming down here for the next week. Remember, low volumes in the market as well doesn't really fill us with confidence. So nothing really changes here from our weekend analysis so far for the S&P 500. Remember to subscribe and, of course, hit that like button if you've enjoyed this video and join us 1.5 hours early before the pre-market open. Also, guys, get in the links down below. Get into the free public Discord. The Discord is absolutely hammering out. There's thousands of people in there now from the community. So why not at least come into the free public? There's a whole bunch of helpful links in there and everything else. All right, guys, good luck today. Bye for now and see you 1.5 hours before the pre-market.